Hi there, how are you doing? This is Jay from Mining Trades. I want to talk to you a bit about trade management. I recently created this trade workflow due to my two slumps, two trading days in the past. I've kind of hit the fan, doing stuff incorrectly, and made this Visio diagram just to increase my sight, just to prepare for Tuesday and try to get back in the rhythm. All right, so in regards to trade management with the workflow, one of the first things we do is we want to analyze the trade. So we analyze the trade, we want to find the ticker. So this could be from our watch list, from the morning's gappers watch list, or this could be from the trade idea can come from scanners such as trade ideas, or this can be called out from, say, a chat room, or people in the chat are calling things out, or this can come from the Zynga Pro, Squawk Box, Stock Twitch, or some other type of news that you found. Moving forward, next step is we want to determine the gap. It says up 2% or down 2%. Usually I like to trade things that are with the gap that have to be within this threshold. My price range is from 10 to 100. Anything less than 10 I deem as a penny stock. Anything over 200 or 100 is just a bit too fast paced for me. The spread's too much and it's just too pricey. Volume, I want to make sure that there is 500K or greater volume. Anything less than 500K is just not in play in my sense. It's just not liquid enough. Next, I want to determine the spread. Anything that is 20% or less is good to go. Anything greater than is higher risk. So if it is higher risk, greater than 20 cents, we want to just reduce the share size and make sure it aligns with our strategic trading plan. So if these criteria do not meet, we will scratch that off and restart the process again. If these do align, we'll go on to the next step and identify the catalyst. So the catalyst could be this earnings, or this could be CFD, or no, my apologies, FDA approvals for a drug, or this could be maybe the CEO resigning, or some type of news, merger or something like that, right? Or buyouts, but most likely we don't want to play buyouts because stocks just trend sideways. Once that's all done, we want to go into the graphs. We want to draw the daily, the pre-market, intraday levels. We want to draw those out, so just to determine the levels of support and resistance. Once we draw these out, we want to determine if maybe there is room to run, because maybe the graph looks like this and the gap's up, it's going up, it has room to run up to this area, so the void. Next, we want to go into and draw the study levels. So this could be the VWAP and the MAs, moving averages. So you want to look on both the daily and the intraday. So maybe moving averages, what I like to do is 200 on the daily and intraday. So this could be 5-minute and a 15-minute or 30-minute, whatever you're comfortable with, whatever aligns with your strategy. And of course, the VWAP is the big important. Next, we want to determine the risk ratio and then make sure it aligns to our strategic trading plan. So my risk ratio is I look for 2 to 1. So for example, I risk $100. I'm willing to only lose $100. But if I risk $100, 2 to 1, that means I'm looking to make $200, which is a 2 to 1 risk ratio. So if these do not align, say all the levels are in the way, or there's no distance to run, or if the catalyst makes there's no catalyst, we might not want to trade this and we might want to start the scan again. However, if this does align, we want to submit the limit order in. So submitting the initial limit order, we put that risk ratio unit, so for example $100 in it, orders in the queue. Once it's in queue, we want to wait to get filled. So say if it doesn't get filled, we want to determine if the trade still aligns with our strategic plan. So what I mean by this is you're thinking, oh, but why would we put this order in, submit the order in, if it doesn't align? Well, you could be in the order, or this order could have been already 30 minutes past the road, 1 hour, you're approaching lunchtime, or maybe there's Fed announcements, or maybe you're in another trade and you already past your max trade. So my max trade is 3. It can be many lines, or even the best case scenario, say you're looking for a breakout on the ascending triangle, but really the stock's just going chopping sideways. So you want to cancel that order. Why be in it? Although these all look right, but the candlesticks on the 5-minute or 15 or whatever is just not aligning to your strategic plan. So cancel it. So if you cancel the order, we will go back and start the process again to analyze a new trade. And if it still aligns, the order's still in and we get filled. So now we're managing the trade because we just got filled. So right when we get in the trade, we see that it gets filled. We immediately set a hard stop, all hard stop, 100% of the shares at the hard stop level. Because like I said, we're risking only $100. We should never go beyond $100 because that is not aligning to our strategic trading plan. If it does not go up beyond, it's poor risk management. We are now getting emotional. Your psychological is not there. You're going against the rules. Next step, we want to immediately put a set limit order for 75% of the shares at 1.75 to 1. So if I'm risking $100, I'm taking a partial point when it reaches $150. But I'm not going to get $150 because I'm taking 75% out. So just remember that. So your orders are in queue. Next thing we do is, since these are in queue, we're waiting. Either one or two things will happen. Hard stop or execute, or the price will hit 1-to-1 R. So if your hard stop executes, it executes, and then we go down this path and the trade is closed. So we just lost $100, or we lost 1 R, which equals to 1 R. If the price hit 1-to-1 R, what we do is this hard stop moves to break even. So now we're risking that $100. The worst it can do is break even because it hit that 1-to-1 threshold. So your orders are in queue, which means you have one order, your hard stop, at break even, and you have 75% at 1.75 to 1. So those are your two options, this one and this one. Now, while these are in queue, we wait for one of these to execute. So hard stop or limit order executed. So if your hard stop executes, go down this path, trade's closed. If it executes, that means we're at break even because we risked $100 and we came out to break even, so we came out $0, which is a win. Or limit order executed. So we had a partial fill, 75% at 1.75, which is good. So now we only have 25% remaining shares. And we locked in profits. No one's ever went broke for locking in profits, so this is really good here. So once we have this in, we want to close the open orders because this order, modify stop to break even, is at 100%. So we want to close the order, and then we want to immediately change this one to 25%. That's all we have left. Because remember, this part got filled, this 75% got filled, and now you have 25% remaining. So we want to move this to break even. If we don't modify this, it's going to cause an issue because it thinks we have 100%. So then it might actually reverse your position here, but depending on your broker. So next stop is we immediately have the hard stop at 25%, and then we set the next 25 at the next level. So where's your next level? Your next level could be 2.21, 2.5, 2.1, 3.1, depending on the levels that you identified here. These levels will determine what these are. Or you manually trade. What I mean by that is maybe you're at 1.75 and then the candle is going up, up, and then you notice that it's making higher highs here, but then it breaks, the next candle breaks the next 5-minute candle. You might want to get out here. Who knows, this could be at 1.5 or maybe 1.75 still. So depending on how you're feeling and what you want to do and what the chart's telling you, there's two options here. So the trade will execute, the trade's closed, and then you evaluate your overall status. So what is the overall status? Well, it can be either max trades. So for me, I have a limit of 3 trades only per day. This prevents me from over trading, and it keeps my commissions low. And I find that if it's within the first bit, I get my best trades in. 2, max loss. My max loss is minus 3R, which is 0/3, because I'm only maxing 3 trades. Each trade is 1R, so 0/3, so 3 Rs. But essentially, how I think of this, it should never actually go to minus 3R, because you might not even actually stop out at the maximum 1 full R. It could be maximum or 0.5 for one, 0.9 for the other one, and 1.0 for the next. So that would be, what is that, 2.4, if that's correct. So I still have this much R left. Or this could be time, 11 a.m. Anything beyond 11 a.m. I will not trade due to volatility is gone. 1, the volatility is gone. 2, the trade ideas is not going to be as good, the chart patterns. 3, the opportunity is gone. 4, you're trading smaller volume. However, if none of these come up, we will look for another trade. But if one of these do come up, we will close the platform, end, and call it a day. Call it a day. So hopefully with these rules, will get you far in your trading career. As I mentioned, you want to stick to your strategic trading plan, your rules. Always obey your rules. That's why I enforced these rules in here. Make sure all these align. Make sure these align. If they align, then let's go into the trade. Make sure these align. Make sure you stop out at that $100 risk or $200, what it is. Make sure you take that first partial. You don't want to be changing this 75% partial here or changing this, because like I said, you're not sticking to your rules. You're not following the charts. You're not trusting your system. So these are just some of the ideas I came up with. If you have any questions or concerns, please let me know. If you have any thoughts, what are your ideas, let me know. Put the comments in the below, and thank you for watching.